real estate versus stocks. Which one is better to invest in? It's one of the biggest debates in the world of investing. And today we're diving in deep to uncover which one builds wealth faster here in Australia. So by the end of this video, you'll know which one will suit your goals better. And if you're new here, hi, I'm Queenie and I'm a licensed personal finance creator. And I'm here to help you make smart financial decisions. I've always been curious about which one is actually a better investment, property versus stocks. And every time I watch a video about this, I feel like the answer is different depending on if the person delivering the information is a property person or a stocks person. So in this video, I wanted to run the numbers with my own numbers, since I have been invested in stocks and property over the past 5 years, to see which one actually made me more money over the past 5 years. So we'll be sharing my own numbers in this video. So let's start with real estate. So 5 years ago, my partner and I bought a property for $500,000 with a $100,000 deposit. We also did some renovations to the kitchen, bathroom, laundry, lights, floor, and we also added aircon in all of the rooms. All of these renovations cost $40,000. Our monthly mortgage repayments was $2,147 per month if we use an average interest rate of 5% over 5 years. We actually bought this property to live in initially, but now it's rented out. So we're going to just use an average rental income of $500 per week over 5 years. So over 5 years, that would give us a rental income of $130,000. After 5 years, the property is now worth $650,000, and the remaining balance on the loan is $364,000. So my equity is $285,000. But how much money did this property actually make me? Here's the thing, and what I think a lot of these videos are missing. There are so many fees when it comes to property, so I wanted to go through them all in this video so we can paint a fuller picture. And by the way, if you are enjoying this video so far, don't forget to give it a like and subscribe to this YouTube channel. So here are all the fees that we haven't factored in. We've already covered the deposit and the renovations, but then there's also stamp duty, which comes in at $17,000. Plus there are other costs like the interest that we pay on the loan, which would be $93,000 over this 5-year period. And that's just the interest that we're paying on the mortgage. There's also strata, water and council fees, which make up $21,000, maintenance costs $5,000. Then there's also property management fees, loan fees, landlord insurance, which would be $6,500. Then when you buy and sell a property, there are other fees, like buying and selling fees from the real estate agent, solicitor fees and marketing fees, which would be $18,000. Plus when you sell a property for a profit, there's also capital gains tax, which would be $19,000. All of these fees would add up to a massive $182,000. A big chunk of this would be the interest payments, because you pay a lot more in interest in the first 10 years of your mortgage. But there is a tipping point around year 15 to 18 where more of your mortgage repayment goes to the principal. So what actually is the net profit? If we take into account the equity, rental income, and then minus the deposit, the renovations, and the total fees, our net profit would be, drumroll, $92,000. Something that I noticed when I was doing all the numbers for this video is with real estate, it can be really easy to focus on the profits. And it can also be really easy to forget some of the fees that come along with real estate. And in this next part, we're going to compare it to stocks and also take into account all of these extra fees that you paid with property and what would happen to those fees if you instead invested them in the stock market instead. On the flip side though, real estate can be a really great investment because your money is leveraged. And of course, we're only looking at the past 5 years. And if you do stretch out the time period, these numbers may look a bit different. And by the way, if you would like to start budgeting and building your wealth, you can check out the platform that we've created, which is called Bilru. It's a budgeting tool without all the noise so that you can focus on what really matters. And here's why I'm so passionate about this tool. One of our early users shared her story about using Bilru. And since using Bilru, she's been able to make some huge changes to the way that she spends, which resulted in her paying off her student loans early and getting onto the property market, something that she thought would take years to do. So if you would like to try Bilru for yourself, I've got a link in the description below. So now we know what real estate looks like, let's compare it to stocks. So to calculate how much we would have over the past 5 years by investing in stocks, we'll use the initial deposit of $100,000 plus the $40,000 in renovations, plus the stamp duty at $17,000. So the total amount invested at the beginning would be $157,000. And let's say I invested this money straight into the stock market, into the S&P 500. In the past 5 years, it's performed with an average annual return of 10.15% per year. But that's not all. There were also a lot of other fees when it comes to investing investing in property. So we're going to see what would have happened if I invested that money straight into the stock market instead. So the initial investment of $157,000, which includes the deposit, renovations and stamp duty, invested with an average annual return of 10.15% per year. After 5 years, we would have $257,000. Then what would have happened if we invested the monthly mortgage cost? The monthly mortgage cost is $2,100 per month. Invested for 60 months would be $157,000. There were also costs like the strata, water and council fees, which would be $1,000 per quarter. Invested for 20 quarters would be $23,000. And then there's also the loan fees of $250 per year for 5 years. Invested, that would be $1,500. So if we invested all of this money, the total balance of our investments after 5 years would be $439,000. But there are also fees with stocks that we do also need to take into account, like capital gains tax, which would be $19,000, and also the brokerage fees of $390. So the final net profit minus the fees would be $110,000. So which one won over the past 5 years, stocks or property? It was actually stocks, which was $17,000 higher. And I have put a link in the description below if you would like to see all of these calculations. Even though stocks won in this particular example, there could be some other situations where real estate comes out ahead. And especially since I only did look at the numbers over the past 5 years, it could be a different story over 30 years. So whichever one is a better investment, stocks versus real estate, it kind of just depends on what you prefer to invest in, because they both can be really great investments over the long term. Let's start with real estate. The pros of real estate is you can leverage your money, which means you use a small deposit and you can control a big asset. Because real estate has more fees, there are tax benefits as well, and you are building equity each month in a physical asset. The cons of investing in real estate is the interest rates really do jump around. You could have really amazing tenants, but you could at the same time also have really bad tenants as well, and it can take a lot of time researching the best property to buy. Now let's look at investing in stocks. The pros of stocks is it's easy to access and trade. You can get started with pretty much any platform with a $1,000 investment. There are also so many different options to choose from. It's also very liquid, so if you need to access that money, it's very easy to sell and then be able to access that cash to use towards something else. The cons of investing in stocks is the market can fluctuate, so if you're not an experienced investor, this can be really scary, seeing your portfolio drop in value. So which one is a better investment, stocks or property? And here's the deal, it kind of depends on your goals. If you're after decent returns and flexibility, stocks might be a good option, but if you prefer steady cash flow and a tangible asset, then perhaps it's real estate. Or maybe you don't even have to choose at all and you could invest in a bit of both. So you might be wondering which side I'm on. And personally, I do lean more towards the stock side of things because I do love how easy it is to invest, and it also doesn't require much thought for me. But I also do like the idea of investing in property, and if I wasn't invested in property, I feel like I would just get a bit of FOMO, feeling like I'm missing out. So I like having a bit of both in my portfolio because I feel like I get the best of both worlds. So let me know down in the comments below, which one do you prefer to invest in, stocks or property? And if you are looking to invest in property or stocks, I do have some links in the description below. I have some links to buyers agents and mortgage brokers, and also stockbrokers like Perla. And write real estate or stocks based on the asset that you prefer down in the comments below, so I know you watched this video all the way through. And let me know if there's anything that I missed out in these calculations. Thank you so much, bye!